What's up guys, it's Matt. So in this video, I'll be testing the 10 and the 20 EMA in a crossover strategy. So the 10 and 20 EMA are probably two of the most common moving averages that a lot of traders use, and a common strategy is to either buy or sell depending on whether or not the 10 EMA crosses above or below the 20 EMA. So the 10 EMA will be in the blue over here, and the 20 EMA is colored in black. So I'll be back testing 100 trades on EURUSD. So this is one of the most common forex pairs that a lot of traders like to trade, and it'll be on the 15-minute chart. And every trade that I take will be recorded in the spreadsheet over here. So you can see that it goes all the way up to 100 trades. This is all set for EURUSD, and then we'll be risking 1% per trade, and our starting balance is going to be $1,000. So here's a quick reminder of our criteria. So again, it's EURUSD on the 15-minute time frame. The data will start on August 1st of last year. The risk to reward ratio is a 1-to-2. Our stop loss will be placed above the most recent high or low. We're risking 1% per trade, and we're only buying or selling if we get a 15-minute candle that closes above or below the EMAs when there's a crossover between the two. So I'll try to keep this as fair as possible. So if we're a pip away from touching the take profit and we miss it, then I'm not going to count that as a win, and I'm not counting break evens, and I'll try to keep the most recent highs or low pretty realistic. And this is all for fun, so let's just see what the results are. I'll speed this up for you guys, but let's get started. This looks pretty crazy when I'm playing this at such a high speed, but if you truly want to slow this down to the absolute lowest speed on YouTube, you could play this back to see that it's legit. One thing that I noticed right away is that due to the fact that I was taking one trade at a time, there were some opportunities that I would miss out on due to the fact that if one trade is already running, then I wanted to wait to close it before I take the second one, meaning that if there was any sort of crossover and a trend continued going in a certain direction, I would have to wait until we get another crossover, which would typically be in the opposite direction. And there were a ton of fake outs because, again, the whole point of this challenge was to just take these trades based on any sort of crossover and to not look at any of the market conditions, which can go to show that a basic strategy like this that a lot of people use has its drawbacks due to the fact that you're not taking into account other factors if you're just looking at moving averages crossing over. And moving averages do have somewhat of a delay to them, so if you're also waiting for a candlestick to close in addition to the crossover, then you will have a later entry. Surprisingly, we did a little bit better than I expected. So after starting with $1,000, we're roughly up $138. However, we have to keep in mind that I did not take into account any sort of fees or any sort of commissions that you might pay to your broker if you're actually trading. So this looks great and all, but if you were actually trading on a live account, you would get charged a fee for every single trade that you take. So I'm sure we would have been much closer to break even or actually slightly below the initial $1,000 that we started with. But we can see over here, I took 100 trades in total. We had 62 losses, 38 wins. Obviously, our favorite pair is EURUSD, and we had a 38 winning percentage. So we lost obviously way more trades than we won, but due to the fact that we had a 1-to-2 risk to reward ratio, even when we would encounter a losing streak of, let's say, 5 losses in a row, over here we encountered 6 losses in a row at one point. Each win would sort of make up for any 2 previous losses. And all in all, this took about an hour, so it took a long time, but backtesting is incredibly important. Even if you have a simple strategy, it's important that you do this either manually or with some type of software, so that way you can get a better understanding of what your trading strategy is actually like. So all in all, was this strategy profitable? Technically, yes, although like I mentioned, with the fees, we probably would have been break even. So I personally wouldn't recommend just trading based off of these rules alone. I think that our stop losses were a little bit too arbitrary. So the most recent high or low that I determined would have been quite subjective. So some people might have based it off of support and resistance. Someone else would have based it off of another factor. And some of these trades I held on for a long period of time. So there's definitely some drawbacks to this, in addition to the fact that if we're in an incredibly strong trend, then I miss out on any trading opportunities if I'm already in a trade. So a better strategy probably would have implemented a method to re-enter if you're in a trending market and you retest one of the moving averages. Or perhaps you could take multiple trades at the same time. So if you're in one trade, but then you get another crossover, then you can take another one. And this is obviously only one example on one pair and on one time frame. So you just have to keep this in mind, but this was a fun experience to do nonetheless. Let me know what you'd like for me to backtest in the next part, which types of rules I should implement for my backtesting. But anyways, I hope this video helped. If you enjoyed it, make sure to drop a like and check out the links down in the description to join my trading community or my Patreon page where you can gain access to in-depth live streams and even more videos just like these. Thanks for watching. I will see you in the next video.